Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Monday, September the 8th. I'm running on less than 2 hours of sleep, but hello, insomnia. It's just sort of the way it goes. It's in little pockets for me, but enough lamenting about myself. Let's talk about the E-mini S&P as we begin our Moneyball morning report for the Benzinga Pro platform. My name is Anne-Marie Band, and we can clearly see that what we've got is a gap event that is sitting well above our closing range candlestick formation, which, is it this one? Yes. Which is this one? Right here. So Jay was on the show with me last night on Market Kickoff, and when I have guests, I tend to let them have the floor. It's just easy, I sort of rant on when it's just me. And so what I noticed Jay talking about was how he doesn't really look at prior days events to help him see what's going on. He focuses on these specific points in time that he deems important relative to trend, and you guys know he uses a 3-minute time frame. The reason I'm suggesting that is because there are all kinds of ways to make money in the market, and our goal should be doing just that, making money, not engaging simply because we are in front of the screen and we have to trade. That is not the appropriate thing to do. Okay, and so as we stare down the price, let's look at what we have going on. From Friday, we had the highest volume candle of the day come from 10:30 to 11. So that's very interesting because for those folks that trade initial balance, right? If they trade that initial balance, it literally broke down and they had a really nice solid short until it came down into the opening range of the prior day, right? And this is our 30-minute opening range. I like to keep an eye on it because it really does end up giving me regions where price action can recover and often does recover. Now, you could say, hey, that's almost the same as the outsized candle at 10 o'clock that we saw. And yes, you could certainly do that. And it actually also converged with the relative VWAP at that point in time. The VWAP has actually moved up because price action has moved up. But whichever way you choose to measure, you do need to look to the left to find yourself relative support and resistance in terms of where price action moves. If you're ever wondering where price action might go, looking to the left really helps. Okay, that being said, we have a gap up into the day where cumulative delta is negative 17,600, where we have seasonality. Seasonality is okay for September in the ES, but in the SPY and the SPX, not so much, which I find is very interesting. But that seasonality event has put traders with millions of dollars in put exposure, much more put exposure than call exposure, giving us negative gamma. So what's the crux of that gobbledygook, Anne-Marie? People are positioned negative into a space where there's a gap up. So two things can happen. They were also positioned negative on Friday into a gap up. And this is what occurred. If per happenstance, that is the same kind of structure that we might stare down, what do we look for? First dip gives us a buy, which gives us a region into the normal VWAP that we can't hold around 6,500. That's also where the call wall is sitting, at which point we end up fading and entering back into the high volume candlestick of Friday, okay? With a stair step potentially at that 30-minute open. The opening range candle is actually inside of our 330 candle. And so when that happens and you think about taking a trade, you want to look at trend and go, okay, if it's up, I'll take a trade from the bottom to the top. I could take a trade from the top to the bottom, but my stop would need to be very tight if that did not go. And that's what I did, taking the short action event, but got stopped out for just a couple of pennies, maybe $150. And that was trading the ES, because I don't trade micros anymore. I find that they build bad habits for me, giving my chart too much time based on the cycles that I watch. But that's just me. To each his own. Okay, that being said, you'll notice that in the E-mini S&P right now, that 4-hour open for Europe is still holding as a floor. If per happenstance we fade, bounce, and then cannot get up over 6,500, we are headed lower. This I find to be a very pretty, I find this to be a very pretty indicator. And why am I going to say pretty? I'm going to say pretty because what it does is sort of confirm what's going on in terms of momentum, but it still tells you it's bullish. Blue for bullish, red for bearish, right? It's still telling you that it's bullish. When it drops off and it starts fading like this, the MACD is already negative, so it tells us that it's moving into support. But when it bounces off of that support, and we have negative divergence here and here, right? High, higher high, high, lower high, high, lower high, it confirms the breakdown event for the price action. Okay, so I do like that one. It's called a multi-length alignment oscillator. There are all kinds of really super cool tools on TrendSpider. I am just sort of a picture person, and so I'm going to look for the pictures that make the most sense to me in order to trade well. So that's what I'm doing. All right, so levels below. Value area high, 6,489. Point of control, 6,481. Visible VWAP for this range of 1, 2, 3.5 trading days, 6,473. And then the lower value area, 6,451. It seems to me that this 6,445 is still a good level to go after, but this is what I'm staring down right now. On the upper edge, how might this unfold? Well, here's how it unfolds. Deep negative placement for the traders. They get jammed up into the buyers, and then the buyers force price up here and decide they're going to go further, and then all the short sellers turn around and buy. As Martin Armstrong says, when you've got a short squeeze and prices are moving higher, those are the only guys that are really excited to get out of the trade. And that doesn't mean excited in a good way, excited in a bad way, right? They have the motivation to buy to get out of the trade. Same thing, that's why short sellers end up holding a floor to the markets, because again, they're the ones that go, well, I better bank my profit, right? But in any case, what we're staring down after the fact on the low end is the 64.32 to 64.40. On the high end, I mean, it could be the high of the CPI, or the employment situation, and that's 6,535. There is, the gamma wall has been forced down, but there are GEX levels above here that make, some measure as a target. Okay, let's do the same thing here and delete all our drawings. Don't be afraid to delete your drawings so that you don't have an extended bias. Or if you're holding a position in another account, don't let that create a bias that doesn't need to be there when you are trading openly. So, high volume candle, oh, that's wrong, just barely. High volume candlestick in the NQ is the candlestick at 9:30, that's normal. The closing candlestick, the 3:30 to 4, looks like relative support to me, right? Our opening candlestick formation was inside of this zone but held the low, which really you can see that that's going to push price into these areas. Ultimately, it should have gone up to 23,825 if there was any real buying pressure. Not so much. Double topping formation, a little bit of negative divergence, but not a lot. Not a lot. The MACD is not giving us a whole lot of that. And you can see from this oscillator here, it's very mild. So looks like sideways action to me. Where should we come into? The high of the last 30-minute candlestick of the day, which also sort of matches the 30-minute candlestick open. That's 23,694. Currently, I think this is our 63. Yes, this is our 63 simple moving average. Traders are going to try and hold this, but this is not an A setup to me. Old resistance, matching a region where traders have volume, coming back into the zone under positive threshold gives me the first upside potential event if I buy 23,700. My stop could be a little tight, but not that tight. I'd need about 30 to 40 points of risk in this environment if you were going to take it on a fade down. If you're waiting for it to bounce up, you can really tighten up your stop quite a little bit. If we lose those levels, value area high and the VWAP are right around 23,570. Point of control for the range that we're staring down is 23,430. And then our value area low, 23,370. Highest volume candlestick for Thursday did provide a relative zone of support for the traders on Friday, but notice what happens when acceleration is occurring and stops get run. This is the sort of wick we see when traders go, oh, I see old resistance, new support, I'm buying it here, and then, it shreds them because it's like 80 points of risk, right? So when a chart comes into an area like this, under big volume, and you can see your moving averages up, it is never a bad idea to collapse into tighter time frames, 3-minute, 5-minute, and watch for the volume to confirm. Let me show you what that looks like. Let me see what time that is, 11 a.m. All right, so let's go to a 5-minute, and we'll go to 11 a.m. on Friday. Right, look at how noisy the formation was, right, at 11 a.m. Now, if we go down, here's our line in the sand, right? There's our, well, wait a second. Where was our line in the sand? Let me look at that. That was the day before's. Okay, now we can go. All right. So here's our line in the sand at 23,548. Okay, that we know from a 30-minute candlestick from the past. So we know that that's a zone, but it comes in, shreds the buyers who have got a tight stop and ready to go, and then they turn around and rip their faces right off. So this very important space is something to look at when we are ready to take a trade. We must think about collapsing to small time frames and then use your MACD to watch the slope change. Use whatever oscillator you have, watch the slope change, or you can do one of my newest favorite things to do is as it comes into a range, look for a high volume candlestick that gets retraced, or the low of it gets held and you can be more aggressive. But if it gets retraced, here's something else you can do with this amazing fractal market. You can draw the formation and say, you know what, I'm going to take the 50% range of that candlestick, and you're going to get yourself a beautiful trade. It's just about focusing and doing the best thing for your charts, right? And what's the best thing for your charts? The best thing for your chart is certainly learning how to manage your risk, because it's going to turn out to be the most important thing you do as a trader. All right, let's go to the YM. All about focus, folks. All about focus. It's extremely important to be very focused in your approach. Shut everything down so you're staring at your charts and they're telling you what to do, right? That's critical mass for the trader. Okay, so Friday's high volume candlestick for the YM is way up here. So this was a clear breakdown space that sent us into the opening 30-minute candlestick of Thursday. Right? Pretty nice. It stops shy of the base, but if you're staring it down and you see this heavy congestion, you can think to yourself, I might front run that. Let me see what I can do if I'm looking for it. Or you collapse into that 5-minute, look for those volume candlesticks that are the highest, and then measure them to see where your support is and where you can measure your risk. Okay, last 30-minute candlestick of the day for the YM was this candle. Now it's important. Someone said during one of our first trainings, hey, does it matter if the candle's bullish or bearish? I'm telling you, it doesn't, because both sides of the trade had to execute. What does matter is relative trend. And so what we've got is we're under the 63 and we are battling the 200. Okay? So what happens there? Do traders buy that 4 a.m. candlestick like they did in the DAX? They could. We could always put that there. I really have to decide whether I like staring that down or if it adds noise or real color. I am deciding that because it's been a while. And, I respect Tom a lot. He's a good guy. So this is what we're staring down. 45,575 to 45,530, and then look at where we are, right? This is inside of the last 30-minute candlestick of the close right there, and we're sitting both at the value area high, 45,473, and the open of the 6 p.m. candlestick. That's a lot of support right there. So they could easily bounce off of that framework. What's the trade? Well, hardly any momentum, for sure. And this outsized volume candlestick will be broken down. So if I were a betting man, I'd say it's range-based. I would sell somewhere around 45,560. My first target would be value area high, which is around 45,460. And then I would walk it into the VWAP and then the big volume zone of yesterday. Okay? And that number at the point of control is 45,309. Value area low all the way down 45,211. Dips or buys, they just could be dippier. And we are very likely to have ourselves some kind of awful sideways structure. Negative cumulative delta continues to rise. All right. Micro Bitcoin. So what are we looking at? This was an 8:30 candlestick. That's our highest volume event for yesterday. The open at 9:30 really wasn't a big candle. The 10 o'clock candle across the board for so many of the indices was this flush, right? Between 10 and 11, 10:30 to 11, all of them just a very interesting flush event that we don't normally see. Now this morning in Bitcoin, we have a little bit of outsized buying. We're back up around that 12,000. Remember, my thought is 113,000 is still a selling zone, right? Now, am I just going to put a limit order there to sell? No, friends, I am not. Because there's a lot of pressure that's trying to get built up, and it could be awfully close to the high of the candlestick here. Now, why is it that I think it heads all the way up there? Simply because we have traversed more than 50. Oh, we are battling it right now. I thought we were above it. This is 50% of the range. 112,368. This is a battleground. This dotted line is the close of the prior day's VWAP. So my thought is pullbacks or buy zones here could be as high as 111, could be as low as 110. But right now, momentum and trend tell us that dips are buys definitively, and I suspect they're going to try to traverse this candlestick here, right? If we were looking at it the way a normal Fibonacci extension might go, we would take wave high to wave low, and you could see that we breached that 50% range. So still thinking pullbacks or buy zones. We're above both moving averages, and momentum is positive around the bend. But I don't think that we had past 114,000. Oil. So oil's in recovery, right? We know we are in backwardation, right? We know OPEC is releasing, and maybe they've changed their mind. I don't know. Here's the storyboard here. As we stare down the 4-hour chart, this is the first time in 4 days that we've had any bullish pressure show up on our indicators. What does that lead me to think? A potential test of $63.66. The 63 moving average and the 200 are sitting right near the closing VWAP from 3 days ago. And that number's up at 64.10. My suspicion is the same, however, that bounces are going to give us another sell zone event, but the bounce could be pretty significant. You can see them buying the higher lows, and this is a formation that still looks pretty bullish. So what do we want to stare down? Let's take a look at the mechanical flow with the high volume candles of the prior day. Here's the first one. The low edge of that candlestick looks like support right now at 61.77. Notice support a little messy, right? So you don't just want to go put a limit order on there, or at least I wouldn't. Okay, the next high volume candlestick is when they actually close at the 2 p.m. candle from 2 to 2:30. You can see that that holds as relative support for the traders in the opening range, and it breaks out and just has not retested that opening range. So here are the stair steps back up if the chart fades. The stair steps up would be from $61.77 to $62.40. Value area low shows a fair bit of congestion there, but there's no real volume. What has picked up is relative momentum, meaning to me that the dips are buys. And since the top of the opening candlestick is, what is that number? $62.89. My suspicion is that's where the floor of this formation is until we jam up into relative congestion. And that appears to be $63.71. Now, could we get some news and it go hog wild? Absolutely, right? But you can clearly see trend is down. Momentum is up in mean reversion. So at any time we could come into this area, bounce near the 200, bounce near the VWAP, $63.50, and then rotate right back over. All right, so a little bit of a cross current, but my suspicion is these cross currents have a tendency to fade. So we'll just watch to see what happens right there, unless you feel like trading it. And then you're not going to watch. You're going to set it up. You're going to manage your risk. You're going to wait for the price. So, as I mentioned, I've been up most of the night, and I got to catch Deanna's show, which is always great. But look at how we were talking about gold. Look at how it's just sat still right in this area. What is the high volume candlestick to watch? We had this one, and that was at 3 a.m. That's just before London opens up. Right? And so far, the high of that opening candlestick is the one the traders are after. Right? Now, let's take a look at the day before. The day before had a very high opening candlestick at 8:30. It's inside of that range. Right? Didn't really give us anything per se. Notice the 30-minute candle open gives us a clear signal what happens when we've got cross currents. Take a look. We breach above it and we breach below it, and then we move above it again. So tough trading, mean reversion. You can see that 63 simple moving average just holding out. Could this be a double top? Yes, it could. It definitely could. Do you want to take it as a topping formation? That's up to you. But if you did, you probably wouldn't want to have a stop that was any higher than $3,663. Right? I suspect that if you try to go short and we breach that level, you're not going to feel good about it. Right? You really are not. And if we do Fibonacci extension on this monster candle right here, $3,680, and then, $3,700 on the horizon. Well, my thought is that we do come back into these lower levels. I wouldn't be averse to taking a short, but I would need to see a loss of 3,651 and then a bounce up and then another loss of 3,651 with momentum changing, because all of this says buy the dip, right? So if it savagely drops down into the opening candle high, the opening candle low, I'm going to get involved. I probably am not going to trade a lot today. I've got Midday Moneyball, and I'm also on Top Step TV, and we've got a Hive meeting. And so my brain is going to be crispy, and I do not want to do anything bonkers in any of my accounts. So I'm going to be very, very particular if I trade at all. Okay, so what's going on here? We've got a gap opening up into the gap. This is the CPI number, the 830 CPI number. Notice the traders are trying to get inside of that box. If we open the day and we move above this range of $648.90, I would not be surprised if we headed all the way back to $650, $651, simply because that would initiate a short squeeze. Look at the momentum and trend. Both of them very bullish. Both of them very, very bullish. Key thing to watch here, right? Lower edges, dips are going to be buys, $644.60. Let's see what the strikes are looking like around. Look at how much negative premium here. See all these puts? That's a lot of puts, friends, thinking that this expiration is going to be something that they're staring down. Look at all of that. Right? So there are a lot that have just been put on. Okay, that's it for me, folks. Good luck, stay alert, and I'll see you on the streams. Take care.